What is up, investors? Welcome back to another episode of Everything Crypto, where we talk about everything related to the crypto markets, including the latest and most important news, deep dives on projects we see as having huge potential in the future, as well as technical analysis on all coins featured on the channel. Now, as always, please remember that nothing on this channel is financial advice, but rather my own thoughts, opinions, and research that I have compiled and broken down into a more digestible format for you, the viewer. So all you got to do is sit back, relax, grab that Sunday morning cup of joe, and enjoy the content. And on that note, if you guys do enjoy the content, please consider supporting myself and the channel by hitting that sub and like button, by showing some love to the Twitter page. You can also go ahead and follow the Telegram channel right here by either scanning this barcode if you are watching on a desktop, or you can just go ahead and click the link in the description to join. And the Telegram channel and the Twitter page is where you will get majority of my real-time updates. Now, for those of you that have been with the channel for a while, you know that the number one principle on this channel is to be fully transparent with absolutely no paywalls associated, no paid Patreon, no paid Discord, as we believe that transparency should come at no additional cost, and that is what we use the Twitter and the Telegram channel for. So if you do appreciate that, if I did help teach you something about the crypto markets or just help give you a little bit of a different perspective, please do consider supporting myself and the channel by smashing those buttons. Now, usually on Sundays, we bring you guys the weekly crypto market update that includes all of the general crypto news and then the Cronos and Crypto.com specific news. However, because we were sick with the flu this past week and we were unable to do the weekly market update, there has been so much news that I actually don't think we'll be able to cram it all into one video. So this first video is going to be, first of all, just the big crypto news that moved the markets, and then we will make a second video with the Crow specific news. But there has been a lot of stuff going on this past week, so I highly suggest that you do check them both out. Even if you are only a Cronos fan, Cronos is not immune to being impacted by the rest of the crypto market, so this is still very relevant for you to watch. And with that said, before we actually get into the content, I do just want to actually read you guys something that I tweeted, and I think this is incredibly relevant as everything has been crashing lately. A lot of people have very low sentiment. I mean, the fear and greed index is at like a 20 or something. It is incredibly low right now. So I do just want to read you guys this tweet, as I do think it's very important. And what I said is, everyone is freaking out right now, and all I can think is I will look back on 2022 as one of the greatest years to accumulate crypto and change my life in the future. This is a gift. You do not make life-changing returns being bullish when the whole world is. So I want you guys to just really think about this before we dig into the content, especially if you have been panicking this week or looking at your portfolio and feeling down. Please just take a minute and think about this tweet, okay? Because nothing has changed in terms of the long-term outlook, and that is why we're here to remind you guys that we are here to take advantage of these dips and reap the rewards in the long run. So with that said, let's take a look at the total crypto market cap, which is down to 1.741 trillion. We got Bitcoin at 38K, so below that 40,000 level of support. We got Ethereum below that 3,000 level of support at 28.24. We got XRP below this 68-cent level of support. AVAX below the $65 level of support. CRO has broken below this 40-cent level of support, which has been a really strong range pretty much since the beginning of the year. And then we got our other favorites like HBAR actually coming right back down to this 15-cent level. You can see here I put on the chart back up the effing trailer, and that is exactly what I did this week. And we got Quant below $100. So definitely looking ugly out there. And why is that? Well, there's a few reasons. And first of all, it does have to do with the war, and we have been keeping a close eye on this war, as obviously the macro events do have a big impact on the crypto markets. And it was announced last week that Russia did claim Mariupol amid fresh evidence that its troops killed civilians. Now, we have been keeping a very close eye on the situation between Russia and Ukraine. A couple of weeks ago, it was announced that there was potentially a peace treaty coming into effect, and the whole market was rallying off of this news. And we did warn our viewers that we thought that this was very, very early for the war, unfortunately, and I did expect it to continue. Now, I do just want to say real quick that on a personal level, my thoughts and prayers are going out to everybody in the Ukraine. Okay, I saw this image of the graves in Mariupol, and this is absolutely devastating. This is something that nobody wants to happen, but we are here, of course, to just analyze this from a macro perspective, and we do need to acknowledge that the longer this war continues and the worse the situation gets, the more of an impact it will have on the markets. And the other big thing that was moving the markets this week was actually the big tech earnings. So we had all of the FANG companies report: Facebook, Amazon, Apple, Microsoft, Netflix, and Google. And for the most part, this was a mixed bag of earnings reports. However, in this environment where people are panicking and freaking out, even good earnings reports are being punished with big drops of at least 5 to 10%. But the bad earnings reports, in the case of like an Amazon or a Netflix, are being punished like 20 to 30%. Now, why does this matter to the crypto markets? Well, what we can do here is take a look at this chart. This is a chart that I made, and what it does is it lines up Bitcoin here, which is the candles. We got the light blue here as the NASDAQ ETF, which is obviously very heavy. I mean, 50% of the NASDAQ is all of these names, plus Tesla and NVIDIA. And then this darker blue one here is Ethereum. And what we can see is that since the beginning of the year, there has been a high correlation between the movement of the NASDAQ and the crypto markets, okay? So essentially, when big tech sells off, Bitcoin sells off. And why is that? Well, that's because these high-tech names are seen as like high-growth, riskier names, and Bitcoin is being thrown into that basket. Now, personally, I think this is actually a huge mistake. I think it should actually be the exact opposite, okay? The reason these high-tech names are falling down is because they are not able to keep up with inflation. Like, for example, Amazon reported 7% revenue growth. Inflation is over 7%. So they are not even keeping up with the rate of inflation. Thus, Amazon sells off and Bitcoin does as well. But the irony here is that crypto is actually one of the biggest answers to this broken monetary system that we have in place, okay? Bitcoin is the answer to this inflation, to all of the money printing going on, and to all of the negative impacts that we are now feeling as a result of this stimulus. So I kind of do think there's a little bit of a disconnect between what Bitcoin actually is and how it is being viewed by the general public. And I do think that there is a huge transfer of Bitcoin going on here from the people who do associate Bitcoin with high growth risk to people who see Bitcoin for what it truly is, which is an inflation hedge and a hedge against this broken dollar that we have. So very interesting, is something to keep in mind as we do have big earnings coming out for the next month. And if the market does continue to sell off on these earnings reports, then Bitcoin and the rest of the crypto markets will most likely follow. Now, despite the sell-off that we have seen in the crypto markets this past week, there has actually been a lot of bullish news in favor of both Bitcoin and the overall crypto markets. So starting off here with the Central African Republic, which is now officially the second country to adopt Bitcoin as legal tender, and a statement from the president's office on Wednesday confirms the passage and signing of this necessary legislation. So according to a statement from the president, the National Assembly passed and signed a bill drafted by the Minister of Digital Economy and the Minister of Finance and Budget, and this legislation established a legal and regulatory framework for cryptocurrencies and made Bitcoin legal tender alongside the existing CFA franc. Now, they said here there is a common narrative that sub-Saharan African countries are often one step behind when it comes to adapting new technology. This time, we can actually say that our country is one step ahead. And this is absolutely correct. And we are now in a situation where the U.S. is falling behind because of this messy regulatory framework, because the government entities in the U.S. are trying to actually fight crypto and control it instead of just simply adopting it like these other countries. And if this does continue, then yes, North America, more specifically the United States, will fall behind. So here you go. They are now the second country to actually adopt Bitcoin as a legal tender. In other news, we saw Panama's crypto law come into place where they did not actually make it legal tender, but they actually exempted all digital assets from capital gains tax. Geez, who wants to move to Panama with me? So they said here that we can't just establish Bitcoin because that will be unconstitutional. And if it's unconstitutional, the project will not happen. The idea is just to respect the tradition that Panama has already had for many years, where the country taxes what happens inside of its borders, and the internet is obviously not in any country's borders. And this legislation was passed by a 40-0 vote, okay? So absolutely nobody voted against this bill passing, which does show that legislators in Panama are also on board with adopting Bitcoin and encouraging people to actually purchase Bitcoin, as you can now sell your Bitcoin at a profit and pay no capital gains tax. And last but not least, Brazil's Senate also approved Bitcoin's law to regulate cryptocurrencies. And they say here that the Senate is finally trying to regulate the crypto market, setting the stage for the creation of a regulatory framework for the country's crypto industry. Now, speaking of the U.S.'s messy regulatory framework that we had just mentioned, we can see here that there is an updated lawsuit against Voyager Digital alleging that they sold unregistered crypto securities. And the claim here is that Voyager Earn program allowed users to earn rewards on Bitcoin, Ether, USDC, and other crypto assets, and it should have been registered with the SEC. The document also refutes Voyager's claims that the Florida court does not have jurisdiction over the company, as the defendants of the class action complaint are vying for a jury trial. So the initial complaint was filed on December 24th, and this came right after Voyager's competitor BlockFi said in February they would pay $100 million in fines to the SECs. And I don't think it is a coincidence that this article was released on the same day that Crypto.com actually went ahead and changed their crypto earn platform to once again nerf their rates. And if you did not hear about that, go ahead and check out yesterday's video because we did break it all down. So this just really goes to show you the difference between some of these other developing countries and the US. And this does show the power shift and how they will start to fall behind, as they are way too busy trying to really just like control crypto instead of trying to adopt it. And a perfect example of them trying to control crypto here comes through BlackRock. So for those of you who don't know who BlackRock is, they are the largest asset manager globally, holding over $10 trillion in assets. And we can see here that, not even a few years ago, the chairman, Larry Fink, was coining Bitcoin as an index of money laundering. And the company always tried to stay away from crypto until the war between Russia and Ukraine, where he did mention that the invasion would lead to a greater adoption of digital currency, making people finally think that the chairman was finally starting to open up to the idea of crypto. And by opening up to the idea of crypto, we do not mean democratizing it for the people the way it should be, but rather BlackRock is now trying to get their greasy hands all over crypto, as they announced a $400 million fundraising round as well as a new relationship with USDC, as BlackRock will now become the primary manager of this stablecoin, which is valued at $50 billion in market capitalization. So once again, big difference here between countries who are trying to adopt crypto for the people by doing things such as removing capital gains tax in Panama or making it legal tender in the Central African Republic, compared to BlackRock here, the biggest asset manager in the world, who now has complete control over one of the largest stablecoins in the crypto space. Now, in some other news, we see that Fidelity is offering 401k investors access to Bitcoin, the first retirement plan provider to do so, and the crypto offering will be available first for their 23,000 employees that use Fidelity to administer their retirement accounts by mid-year of 2022. And Fidelity has $11.3 trillion in assets under administration as the largest retirement plan provider. And this decision could absolutely make crypto more popular and mainstream. And Dave Gray, the head of workplace retirement offerings and platforms at Fidelity Investments, says that they made this choice because there is growing interest from plan sponsors for vehicles that enable them to provide their employees access to digital assets in defined contribution plans, and in turn from individuals with an appetite to incorporate cryptocurrencies into their long-term investment strategies. And this is significant, as we can see here from a tweet from Anthony Pomp. He says that 98% of retirement accounts in the US cannot access Bitcoin. That's, what is that? 39.4 trillion? Like, I won't even pretend to know what that number is, but that's got to be like at least $1 trillion. There's like freaking 11 zeros there. Basically, that is a lot of money sitting on the sidelines that could potentially be entering Bitcoin, as Fidelity does open up these services to citizens across the United States. Now, in some other news, we see here that Stripe is to allow clients to make payments in USDC, now being controlled by BlackRock, stablecoin via Polygon, and this will start with Twitter. Okay, so we did talk last week about how Stripe was actually integrating with Shopify and the the Bitcoin Lightning Network, and now Stripe is making another move by using the Ethereum scaling platform Polygon that will enable Stripe's customers to pay sellers, freelancers, content creators, and service providers in crypto. And these initial payouts will be made using USDC stablecoins that are native to the Polygon network and through Polygon compatible wallets. And Twitter will be the first company to try out this feature, allowing earnings to be paid out to content creators in crypto for users of the company's monetization products, such as their ticketed spaces and super follows. And Stripe said they will add support for additional rails and payout currencies over time. Now, the crypto exchange FTX is using Stripe to build onboarding and identity verification features. So Stripe here is making a lot of moves to actually go ahead and integrate cryptocurrency into mainstream payment methods. Now, moving on here, we see that the Australian Bitcoin and Ether ETFs were delayed due to standard checks. So they actually were supposed to launch this previous week in Australia, and this would have been the first Bitcoin and Ethereum ETFs to go live. However, a powerful but undisclosed third-party broker reportedly blocked the listings, okay? And what we can say here is that according to a statement from CBOE Australia on Tuesday, the ETF securities Bitcoin and Ether ETFs will not commence as expected. And the reason being is that a service provider downstream has been fingered as the responsible party, through details of which the provider ETF securities and Cosmos are referring to were not given. So basically, they were not given full clearance to actually go ahead and launch these ETFs, and some undisclosed third-party broker with a lot of say in this space said that he would not allow these listings to go through. So it is delayed at the moment. However, I would expect that eventually these will launch in Australia. We've already had them over here in Canada for a long time, and I take full advantage of them in my tax-free savings account. And I do think it is only a matter of time before these are rolled out on a global scale. Now, in some Ethereum news, first of all, we've been talking about ETH 2.0 quite a bit on this channel. And we did discuss last week how it was being delayed and people were using this as a sell the news event. Personally, I enjoy any delays that are coming to ETH 2.0. I would love for people to get more and more bearish on ETH 2.0, for people to think that it's not coming out, for everyone to sell off their Ethereum, because that just gives us more and more time to load the boat in preparation for when ETH 2.0 does finally go live. So we did discuss the first shadow fork that went down about a month ago, and it was completely successful. However, that was on a test net. The significance here is that this was a mainnet shadow fork that went extremely well, and we have Adrian Sutton here giving the breakdown on what exactly went down during this merge. However, it was a huge success, and I do still expect the ETH 2.0 merge to come at some time early next year based on the information we've been given. Now, we also actually got Ethereum's quarterly performance results and key themes to watch out for. And basically, we're just going to go over the most important things to look at. So first of all, network revenue for Ethereum increased 46% from 1.6 billion to 2.4 billion. And this measures the value of transaction fees paid in Ethereum by the network users. And now 2.1 billion of this revenue, so 87% of the total revenue, was removed from the circulating supply of ETH via the burning mechanism via EIP 1559, which went live in August of 2021. And this is what we have talked about here, is ETH becoming a deflationary asset as we actually transition to ETH 2.0. And I think this is something that a lot of people have not figured out about Ethereum yet, is that people are always so focused on Bitcoin, how Bitcoin has a fixed supply, how it's deflationary. Well, guess what? Ethereum is basically now the network of networks for cryptocurrency, and it also acts as a deflationary asset. And we can see here that the inflation rate decreased from 54% to 1.10% to 0.5% during Q1. And this metric tracks the net change in the supply of Ethereum. So new Ethereum is still being issued through block rewards, which are paid out to miners as a reward for confirming network transactions, and they are then burned through the aforementioned EIP 1559. Now, the average of daily active addresses rose 4% from 507,000 to 529,000, and this tracks the average number of addresses that interacted with the network each day over the course of the quarter. And I mean, I wouldn't expect too much crazy growth from Ethereum moving forward in terms of average daily active addresses, as it is already so big. And if you guys were not aware, last year, the transactions on Ethereum actually outpaced Visa by 4.5x, okay? So just think about that for a second. Ethereum transacted 4.5 times more money transactions than Visa did. Just let that sink in. And last but not least, Ethereum staked rose 111% from 5.2 million to 10.9 million. And this represents the number of ETH staked on the Beacon chain ahead of the transition to ETH 2.0, which is, so Ethereum is currently utilizing a proof of work consensus mechanism, and ETH 2.0 will move it over to a proof of stake mechanism. And this represents 9.2% of the total Ethereum supply being staked in anticipation of the merge. So basically 10% of the total Ethereum right now is currently locked, and this is why we have actually been loading up on Ethereum through, the actual Ether itself, as well as in our TFSA through ETFs, because we are planning to actually trade some Ethereum and take some profit as ETH 2.0 does come out, as I would expect that when this lockup period is finally done, that people will begin to take profit. I mean, some people have had their Ethereum locked up here for over a year. A lot of people are deep in the money, and I'm sure they will want to free up some of that capital when it is possible. And then in terms of the DeFi here, the TVL increased 82% from 49.1 billion to 89.5 billion. So still some explosive growth in terms of Ethereum-based DeFi protocols. Now, we're not going to go through this whole thing, as there's really so much to go through here, but you guys can go ahead and check this out for yourself on a banklesshq.com. But some very impressive numbers from Ethereum. Now, in some other news regarding the XRP lawsuit, we can see here that Judge Netburn gave a recent ruling, and she dropped two absolute gems for us. And the court states, my understanding of XRP is that not only does it have sort of a currency value, but it also has a utility, and that utility distinguishes it from Bitcoin and Ether. Presumably, under this theory, then, every individual in the world who is selling Ethereum would be committing a Section 5 violation based on what was just said. So clearly here she is saying that XRP cannot be a security. And this is just common sense in my opinion. This is why I think there's no way that XRP loses this lawsuit, okay? Now listen, XRP is the currency that is used to make these transactions on the XRP ledger. So it's a currency. It's used as a transaction of value. How can you dictate this as a security? And that's what Judge Netburn is saying here. So I do think the court will rule in favor of this. Now, Judge Torres, the main judge on the SEC versus Ripple case, has actually moved the date up to November. And now, however, even given this good news, while I thought it was good news, XRP has corrected about 20% this month. And this is just a sign of people who are being impatient. I saw a ton of comments from people saying, oh my gosh, like now we have to wait till 2023 for the lawsuit to end. A lot of people are starting to lose faith in this lawsuit. And just like we mentioned at the beginning of this video, just like we mentioned with the ETH 2.0 merge, we want to take advantage of these impatient players who are selling their Ethereum and their XRP because they don't want to wait another 9 months. That is fine. We can take all the time we want over these 9 months to load the boats in anticipation for what is to come. And last but not least, we see here that Brad Garlinghouse, the CEO of Ripple, is just absolutely firing shots at the at the SEC. And you know what? Good for him, because honestly, screw the SEC, okay? So he says here that over the past couple of years, I found myself becoming far more familiar with the SEC than I ever thought possible. It is beyond ironic that one of their goals is to provide disclosure. I guess they don't need to abide by their own rules. The SEC seems perfectly content to let the US fall further behind, just like we discussed at the beginning of the video, all in the name of protecting their own jurisdiction at the expense of US citizens. Politics over policy is good for no one. We need a clear regulatory framework now. This is why I love Brad Garlinghouse as the CEO of Ripple. And really what he's saying here is a bunch of stuff that we did discuss at the beginning of the video. The SEC is not playing by their own rules, and they are screwing U.S. citizens without this clear regulatory framework, okay? There has been so much money lost by XRP holders as a result of this lawsuit, and I honestly cannot wait for it to conclude in our favor so we can make all of that money back and give a huge middle finger to the SEC. Now, moving on here, we see that Quant last week did actually participate in an event with some big players in it. And I tweeted here at the Financial Times Digital Asset Summit, joining Quant was Visa, MIT, and the Bank of Canada are participating as equals. Probably nothing, ... Quant is my Bitcoin. Okay, so basically what this Financial Times Digital Asset Summit was, it was basically regarding CBDCs and the regulatory framework to actually launch CBDCs on a global scale. Now, I wonder who has the technology to actually facilitate the interoperability of these stablecoins over multiple blockchains. Hint, hint, that would be Quant. So that is why we keep such a close eye on this project, as I do believe that Quant will become the center hub for interoperability when CBDCs are launched on a global scale. So listen, we're going to wrap up this video on 2 notes because this was a really long video, but there are 2 things that we are very certain of that will be coming in the upcoming years. And the first one is that banks and financial institutions will begin to adopt CBDCs. And if BlackRock, the biggest asset manager on a global scale, was not a leading indicator of this, I don't know what would be. But what we do know is that for these CBDCs to be transferred, we cannot guarantee that it will all be on the same blockchain. And the Quant Overledger here is the technology that will make it possible to actually interoperate these multiple blockchains, making for seamless transfers of CBDCs through multiple different blockchains. We also know they are in very tight with the Digital Pound Foundation, the European Association, and so on. So that is why we are invested in Quant. We don't need to like it, but we are here to make money from it, okay? I do not want these institutions to get their hands all over CBDCs, but the matter of fact is it is happening, and we cannot do anything to change it. But what we can do is we can try to make money from it, okay? And that is why we're here. We are not here for our emotional opinions. We are here to give a level-headed opinion on what will happen in the future. And given my research and a lot of the news discussed in this video, I think it is only a matter of time. So first of all, we covered XRP in this video, and the reason we keep such a close eye on XRP is because I do believe in upcoming years, the XRP ledger will replace SWIFT technology as the actual tech that institutions use to transfer currencies across the world. And secondly, we believe that as CBDCs are implemented on different blockchains, there will need to be some sort of technology that actually makes all of these blockchains interoperable so they can communicate with each other, and that is where Quant comes into play. So once again, guys, we don't need to like it. We're just here to make some money from it, and that is the purpose of this channel. So on that note, I hope you guys did enjoy this weekly market update. There was plenty of news to get through, and I'm honestly sick of hearing myself talk. So I'm going to go take a quick break before we hop into the Cronos specific news. I hope you are all having a peaceful and restful Sunday. I love and appreciate you all. Catch you guys in the next one. Peace out for now.